Hey, what is up, guys? This is Gen Z Finance, and I'm back with another video for you guys. This one's gonna be about what I made for my plans for this next week in trades, and how you guys can possibly replicate it if you'd like, and this is all in the Robinhood app. If you guys are new to the whole investing atmosphere and have not created an account with Robinhood yet and you'd like to, I can leave a link down in the description below. If you guys want to sign up, you can get a stock valued up to $200 for free if you use my link. And all you need is a valid social security number. You need to be a U.S. citizen, and you need to be over the age of 18. So just those three things, and getting a free stock valued up to $200. So not a bad deal. As always, guys, I am not a financial advisor. These are simply just suggestions and ideas that I've come up with for my own investments. If you choose to follow what I do, it is at your own risk, so be careful and do your own research before you perform any of these trades that I perform. Alright, so now with the video. So this morning was kind of hectic. I woke up right at pre-market, and I was looking at all the options that I was going to try and get. I started them before the pre-market, but Robinhood was really glitchy because of the high yields. Like, there was a whole bunch of people trying to buy and sell. That I think their just capacity was reached. So I ended up not getting the ones that I wanted. They were cheaper and they were at lower prices, or lower strike prices, but I still ended up doing okay for the day. So as you can see here already, today I'm up almost $200 for the day, and now to show you guys how I did that. All right, for the first one, TQQQ. This one I ended up doing a put spread. I ended up selling 2 at 154, and I bought 2 at 153.5. So the strike price difference is $50, but my average credit is 12. So basically what I did is I made a $50 collateral for $12. And if you do the math, that's a 24% return. So I did that twice, which is $24, and I put $100 collateral. So if this works, I make 24% on my money, and it most likely will. I can't see TQQQ dropping below. I mean, that's $10 of what it's at right now. That's a pretty huge dip. And so I'm pretty satisfied with this this put spread, and I think I'm going to hold this one till Friday and just let it expire and make that $24 and keep my 100. Okay, for the next one, this is also TQQQ. This one I just decided to make a little bit riskier. So this is a $100 strike price. I sold 2 at 156, and I bought 2 at 155. So you got a strike price difference of $1, so it's $100 I put in, but then I bought it twice, so it's $200. But I got credited the $56. So basically, if this stock stays above 156, which it most likely will, I mean, that's a pretty big dip to drop down below 156, I make the $56 and I keep my 200, which is over a 25% return. It's like a 27% return. So that is also or 28% or something. So it is also a trade that I'm pretty happy with, and I will most likely hold it till it expires and get the $56 on credit and the $200 that I put on collateral back. So I'm pretty happy with that one. Now for my third one, I bought 2 different ones for Apple. I bought a put credit spread at 122.5, and I sold them at 123.75, which is $125 because the strike price difference is 1.25. And I bought 4 of those, which ended up totaling up to a credit of 124 because each one was 31 cents. So 124, but I had to put a collateral down of, I believe it was $500, which makes this around like a 23% profit if this works out. So as long as it doesn't go below 123.75, I make $124 and I get my collateral back of $500. Now I also did it again a little bit after that one. I put a strike price at 125 to sell 4 of them, and then a strike price of 123.75 to buy 4 of them. It was the exact same collateral. It was 500 collateral. The limit price of each was 31, so I made 124 bucks off of it. And if it stays above $125, I get my $500 back and the $124 credit. So in total, I would make $248 off of $1,000 collateral, which is pretty good. That's like a 25% return, and I'm pretty happy with that. Now for my fourth one, I picked Amazon. This one was another put credit spread. I sold one at $33.90, and I bought one at $33.85. So it was a $5 difference in the strike price. So it costed me 500 bucks. But this 500 bucks, the credit that I got from it was $110 right here, which is $1.10 if you compare it to these ones right here. I don't believe it'll go below $33.90. As you can see, it would have to drop a little under $100, around 90 bucks, to get to where I'm losing money. But I don't really think that'll happen. So I think at the end of Friday, when this expires, I will have made 110 bucks and get my $500 in collateral back. So another trade I'm very happy about. And now for the last one. This is my put and call credit or debit spreads. So this one is the one just like my previous video of how I doubled my portfolio in a matter of 2 weeks. I'm doing the same strategy with this one, is where I bought a call at $4.85 and I sold it at $4.95, which is a $10 strike difference, which makes it $1,000 that I have the potential to make. And for this one, it's $4.37. And I bought one for $4.47, so another $1,000 difference in strike price. And you want to make sure the put strike price difference are the exact same as the call ones, just like I did right here. And if it goes above $4.95 or it goes below $4.37, I make the $1,000 back. Well, it's $1,000, but that's not all profit. My cost was $568. So therefore, I'd make $432 in profit. So it's like an 80% return. These are riskier ones, so play with it as you will. But I mean, it's already up 80 bucks. This is very volatile right now because it's on Monday and there's still 5 days left. But as you can see, Tesla is already almost up to $4.95, which is very surprising. It has had quite the rally. It's almost 11.5%, and that was just 1 day after the stock price split. It did a 5-to-1 split. I talked about it in my previous video, if you guys want to go check that out. But yeah, it has soared today, and hopefully it makes me quite a bit of money. All right. As you guys can see, I have also sold just about all of my stocks. I tried selling this one. This one is still in the process of being sold. It's partially filled. I just don't really see the point of it for me right now in my situation of holding stocks when they aren't really making a whole lot of return for me. So I sold the stocks that I had, and I'm putting them more into options. And I think that's what I'm going to mainly focus on throughout the next couple months. And as always, guys, I'm not a financial advisor. Again, these are simply just suggestions and ideas that I've come up with for my own investments. If you'd like to follow what I do, it is at your own risk. So be careful and do your own research before you perform any of these trades that I perform. And I highly recommend you do your own research because, yes, you can make a lot of money. Like today, I made almost 200 bucks. But you can also lose a lot of money if you just kind of follow what somebody else is doing blindly. So I highly recommend you do your own research. And that is going to be it for this video. I hope you guys enjoyed and learned something new throughout this video. And I would love it if you hit the like button and subscribe to my channel. It would mean a lot. I'll see you guys in the next one. Peace.